Hello and welcome. I'm Andrew Delaney, Chief Content Officer at A-Team Group, and I'll be hosting this session on the impact of ESG on data management. ESG, of course, refers to investing from an environmental, social and governance perspective, and its emergence coincides with a heightened level of awareness among investors about the investments they are making. I'll be joined today by Kieran Gallagher of IHS Markit. Kieran, welcome. Before we start the discussion, maybe we could kick things off and you could tell us a little bit about yourself and your interest in this segment.
Okay, thanks, Andrew. I'm the product owner for Market EDM's data warehouse. It's a reporting platform that we use to service a number of different asset managers and asset servicers. One of the big moves that we're making this year is the investment in ESG. It's very interesting for me. I kind of grew up in the data business. I spent probably my first 5 or 6 years working with valuation companies, both at IDC and Reuters. After that, I moved more into the software space. I've always been really focused on data management, but a particular focus on the buy side, which is kind of where I think is an interesting niche where we don't see a lot of specialized providers kind of addressing all the needs of those managers, and we think we've got a great platform for that.
Very good. Well, thank you. Thanks for joining us. So let's kick off the discussion about ESG. Over the past year or so, we've seen a significant increase in the number of news stories, product announcements, and so on related to the ESG space. What do you think is the reason behind the sort of sudden interest in this, and what is the evolution that has brought us to this point?
I think the sudden interest is really the explosion in the market in terms of investing into those asset classes. If you look around 2014, we started to see, a steady increase and then, really an explosion in terms of the number of different products and asset classes and vehicles focused on this, especially in the ETF space. I think we went, in the last 3 years, we went from about 50 or so to 300 or so different products in the space. So what you're seeing is just an evolution in terms of the investment pattern. And I think asset managers are seeing a new asset class or effectively a new market where they can attract new investors. And I think there was an initial sense that, the ESG product had a very boutique kind of feel, millennials, younger investors looking for, an investment that really allowed them to align to values and personal values rather than, just core value of the stocks. But I think we're starting to see that, the returns in these markets are relatively, or in these products are relatively stable, and managers are seeing that this appeal to kind of draw them in. I mean, it's not, a relatively new phenomenon in terms of this. I think MSCI's first socially governed or responsible index came out in 1990. Dow Jones had a sustainable index in 99. So, the space has been around, and if you look at some managers, they're touting that they've had products as far back as, the early 90s, late 80s. So it's been around, but I think, the movement of money into the space has really been the reason why we're starting to see such a trend up in terms of both news stories and new product launches around that. We've been tracking the space for the last 3 or 4 years fairly actively. I think in 2016, 2017, once a better set of indices and a better set of factors were initially published, we saw a lot of pensions initially come onto our platform requesting that we have some kind of support for one ESG model or another. And then over time, it's just really ticked up to all of our traditional funds clients. A lot of our legacy clients are coming back and saying, we're going to need to expand our support for this in a more meaningful way. So, I think people are looking at this as a market where there's investment and there's new investors and there's new money potential in there. And I think that's really the reason why we're seeing such an uptick.
Very good. So do you think there's been a sort of a maturity in terms of performance of these assets? I mean, you say they've been around for a long time, but it seems like now they're established and that they perform as other asset classes may be expected to perform.
I would 100% agree. I mean, if you look at, say, the MSCI 400 social index versus the S&P 500, you're going to see, an outperformance or at least a consistent performance with, some of those broader indices. So there's definitely some maturity in there. And I think from that standpoint, I think we're going to start seeing a push towards ESG products as kind of the way forward in a lot of ways as we come out of recovery. I've read a couple of papers that have recently talked about the fact that ESG investing could be a significant source of return in the coming year as we come out of COVID. And we look at that recovery model, and this kind of green investment, socially responsible investing cycle could be a real path forward, especially in certain markets where there hasn't been a focus, like Latin America.
Very good. That's a very interesting. Segues into our next question, really, which is about, what do you think the combined impact of the COVID crisis and the sort of ongoing and increasing calls for social justice have been on the ESG investing space?
I think it's brought a light to it, but in reality, I think it's in some ways just a casual kind of timing or a casual coincidence. I don't know if you can call what's going on right now so in such a light terms of coincidence. But what I mean by that is if you look at, again, the growth in terms of the space, we saw that uptick begin in 2014, 2018, 2019, just saw explosive growth in ESG investing, in both in terms of the number of funds that were launched and the amount of AUM flowing into it. And, that tracks, a year to 8 months before any of the COVID issues, before any of the more recent Black Lives Matter protests in the US. So, I think that there is a call within the larger marketplace in terms of looking at the organization, looking at your reputation, looking at your governance practices, and thinking about things differently. And investors factor that into their decision-making cycle. I think that's clear. But, I don't think, if you look at the trend and the time it takes to launch new products and go to markets and verticals, I think the trend was there before all of this. I think it's just, validating a few things in terms of the approach. I think one of the things that's changed is I think if you look early on in the cycle of ESG investing, the goal was around offering an alternative product. It looked at more of the personal values of the investor. But now I think you see your question about, the growth in performance, indicates that these products are actually either performing well against other broad indices or outperforming in certain cases. And what we started to see is if you don't have, a good governance policy, if you have controversies, whether they're environmental or whether they're social, they can have a significant impact on your business and more importantly, on your stock price. I think I saw a report where companies that had a significant kind of governance event or a controversy event from an ESG perspective had a 2-year lag on performance of their price versus their broad index. And it was somewhere in the range of, 10 to 12%. So, I think that the trend here is that we're going to see ESG continue regardless of what happens with COVID, as we move through kind of the current political climate, because it's going to be a meaningful path forward again in that recovery. And I as I said, there's a few interesting articles there around that. So I think it's helped build a case. But for example, we were probably 3 or 4 months into our ESG investment prior to the COVID, the initiation of COVID.
So it sounds like ESG is probably here to stay. So over the long term, there's an impact there on the way the investment industry functions. What does that mean in that sort of longer term, if you like, for data management as a discipline? What impact does that have on data management?
So, the ESG data set in some ways creates new operational challenges for asset managers' data teams, because obviously first is the evaluation of the product and the fit. So if they're looking at a provider for ESG analytics or ESG ratings, there's a lot of variance between the providers. So, one of the challenges is that you've got to choose a provider that maps well to your organization, that fits well into your reporting requirements, and kind of gives you the ability to face off with clients. A big piece of what managers are looking for right now is just simply the ratings component, because obviously they want to be able to make sure that their selections and all of their assets align in terms of that governance model and that review. But, one of the challenges that the managers are seeing is there's a lot of variance in terms of both the rating structure and the underlying metrics that factor into how different companies will score on each of the providers' metrics. So it's been difficult for users to kind of look at a rating value or a rating score and effectively, confidently assert that they're in line with that. I think I saw an article yesterday in Financial Times that the big four accounting firms are all kind of pushing for better tracking and auditability and sustainability. And there was a comment from one of the authors of that particular press release about an alphabet soup of different ratings and scores data. And I think they were really talking about, there's some incongruity across the providers. Now, we kind of looked at this and we said, well, we just needed to build a platform that would not be tied to a single provider or a single definition. And kind of a big part of our evolution was thinking about how we would build that out.
Very good. I think you mentioned earlier you're looking as part of the IHS Markets EDM team. You're looking to add ESG analytics into your platform. How did you shape your priorities for doing that, and how do you think clients will react?
So we've actually had some level of ESG support for several years now. EDM as a platform has always taken the approach of being client-centric and data-centric, meaning that the clients have the ability to add new attributes and add new data points into the platform. So in some fashion or another, we've been supporting ESG data in the platform for about 2 or 3 years now. What we started to look at, though, was giving better repeatability across the platform in terms of support, so that the work we were doing would work again across providers and across clients. So our first approach was really starting to think about how we would structure the data. So we built out, in a dry kind of way, a data definition that allowed us to define each of the underlying factors, define their hierarchy of how they roll up to a parent, and then how that parent affected the overall score. And the reason why we did this was we found consistency across all of the different models in terms of the way data was structured in order to determine rating, in order to determine score. And we thought the most effective way was to give our clients the ability to kind of itemize that, so that if there's new hierarchies introduced, that the platform could easily handle that and handle that change either on a retrospective basis or a prospective basis. Because, one of the things that clients are always going to be tasked with is looking at, allocation and looking at trend over time. So you need a way to promote better consistency of that data. So our first investment was really in how we would structure and kind of organize the data in a way that we could take this forward in a templatized approach to clients. So that release is really a set of interfaces that allow us to read data from either Sustain or MSCI or any provider and really restructure the data in a way that clients can independently track that. And we did it in a multi-tenant approach, meaning that a couple of our clients have said in different markets or different regions, they needed, support for multiple providers. So we included that in the platform. The next thing we started to think about was the user experience component, which is, once we have this data in there, how do we associate it with our portfolio evaluations data? How do we bring that together with product master information? How do we also align and allocate and show a benchmark relative to an active portfolio and kind of give deviation? So we, again, built out templates and reporting experiences around all of those different functions. So, we, again, thought about it from a practical perspective of the data set is emerging, changing, and constantly getting new data points. How do we adapt to that? Users need a quick way, once they have the data in-house, to turn that around. We thought about that. And then we're now more and more now thinking also about where we go from a visualization perspective. How we're going to feed this into a variety of different data visualization platforms, AI platforms. That'll be the next evolution of the process.
Very good. In terms of client reaction and indeed more broadly, client awareness of this segment, I mean, how are clients reacting to what you're doing, and what do you find their sort of awareness to be?
So, we've always found as an organization that there's a tremendous amount of consistency across different verticals. And when we went into this space, obviously we talked earlier, the asset owners were early to the space. The pensions, the supranational funds were all there. With the investment managers, I think it was a pretty quick turnaround once that money was starting to come from the pension mandates, that they were on board. They had a lot of good questions in terms of data structure. We took a very practical approach of going to each of our kind of core verticals and partnering with clients and kind of taking them through the data model, getting them bought in, getting them set on the direction. Some of our clients use the reporting warehouse. Some of our clients are more typically what we call a classic EDM client. So we gave them the optionality to, leverage just the data management component or the reporting and templating component as well. So, we tried to make sure that we've targeted and we focused our response towards the client's direct need. And we've done fairly well in terms of getting feedback from clients. I think, our first cut of that data model, which is, again, a relatively dry kind of data structure, most of the clients were really receptive and anxious to get that into their hands so they could start doing their analysis. And we worked with them to kind of validate against a few different providers. And I think that was helpful in terms of getting that buy-in.
Very good. Obviously under the current situation, we've got a social distance, we've got travel restrictions. How have you worked on getting that kind of level of feedback from your clients? How difficult has it been, and did you take any special measures to make it happen?
I think my answer would be different a few months ago. I think March and April, I think a lot of organizations were getting their feet underneath them from, a kind of an infrastructural perspective, how to manage meetings, how to manage scheduling. As an organization, market was fairly solid. We took a fairly aggressive stance in terms of COVID. So from access to tools like Teams and WebEx and a variety of different online platforms, we were ready to go. I think one of the challenges we had was in this new model, we found it's more about proactive scheduling and frequent communications. We leveraged a lot of our client account management team. So we assign a kind of a dedicated manager to a pool of clients, either in a region or a market, and they helped us in coordinating work. The feedback loop on the product is critical. As I said, we really tried as we went through this to get as much buy-in across different stakeholders because it gets you to a sharper delivery. And the only way to really do that was to work in a way that was a little bit more structured. So we definitely try and structure that comms presence. And this is kind of one of the benefits of being with a larger organization, is we have much more maturity in terms of that client account function. And it gives us the ability to kind of leverage that and take that forward.
As from your perspective, as part of the IHS Markit EDM group, how much of your activities are informed or directed or influenced by wider initiatives across that larger organization that you mentioned, across IHS Markit, as the broader organization looks at ESG in general?
Quite a bit, actually. So last year, we brought on a new head of sustainable finance, Kevin Bourne. Kevin is really building out a vision and product in terms of our ESG analytics. He's building a new product on there in our sustainable finance division around bringing on additional data points and metrics. I think the evolution of ESG is the fact that aside from the data that's currently most frequently used, which is ratings and the factor data, is that there are more and more underlying metrics that users are looking to bring in so that they can validate those underlying data or those underlying data sets, so that they can use that more proactively in screening and controversy analysis and trend analysis. So, markets kind of evolution and getting into the ESG space and that larger investment that's going on, we're constantly sitting with that team. We're lucky in the way that they're a very collaborative team in terms of they run cafe sessions and internal working groups. They run external sessions, and we have access to all of that material. Again, I think one of the benefits of being with a larger organization is that we have both the software component and we have the data component that we use to validate our underlying delivery. We get vision into a broader vision into what clients are asking and the new questions that are coming in. And that's been really helpful. I think the other thing from a technology perspective is we're starting to, again, look at AI. We're looking at our data lake as a platform to kind of both pull data and receive and post data to once we've gone through our kind of validation and our scrubbing. So there's a more holistic approach in terms of a technology delivery around where clients want to go in terms of not just month over month reporting, but trend reporting, AI analysis, those types of things. I think the company has a larger vision for data than just what's in our warehouse. And that's extremely helpful because it helps us craft what clients will be doing with that data down the line.
Very good. And finally, coming back to your group, the EDM group, if you will, and ESG, you've hinted at a few things coming down the pipe, but are there any specific plans for 2021?
Yeah, I mean, we've got quite a bit going on. We're in the final phases of our end of year delivery. A lot of that's going to be the new ESG templates and a lot of the new data sets and providers that we're working on. We're always tightening up our story in terms of platform integration. So I think down the line, we'll start to see the warehouse being a primary data source into our front office application platform for ESG data. I think we'll start to see us look more towards a standardized integration with our internal IHS Market data lake. And that would give clients the ability to also use the data lake in conjunction with EDM and EDM warehouse. We're constantly thinking about visualization. We're thinking about new ways to surface data. We're bringing on new UI components. We're really trying to give as much as possible a very mature, shrink-wrapped kind of user interface around all of these different data sets that we manage, because it gives clients better repeatability. It gives them ROI. Most importantly, it gives us the ability to then take those data sets via our API layer that we've invested heavily on and start publishing out to other service providers, and gives our clients more agility. Because what we're seeing is a move towards a SaaS-based offering, but clients with multiple cloud offerings, and that the EDM platform, both in its as a data manager and a warehouse, being a real backbone of integration between all of these different cloud providers and service providers, and giving clients the flexibility to be more agile.
Excellent. Okay, I think with that we'll wrap things up. So I would like first to thank Kieran Gallagher for his excellent contribution today. Thank you, Kieran, for sharing your experience in this space.